Okay, thank you. So, yeah, thank you very much for inviting me to speak. It's a pleasure. I did come to the conference 2 years ago in Istanbul, and I enjoyed it then. Istanbul's a great city. The traffic not so good, but everything else I thought was great in Istanbul. So let me begin. We just Okay, so there are three things that I want to cover today. The focus will be on the Russian steel market. Second will be the global trends. As being a large exporter, these inevitably impact the Russian steel market and particularly the prices. And third, which interestingly has been in almost every presentation I've seen, will be sustainable steel, but particularly what NLMK is doing and what the industry trends are in relation to that. So to give some background about how we arrived here, sheet prices in Q2 this year and sheet demand was particularly strong in Russia and on the export market. So this was a benefit for Russian producers. As you can see, there was a large fall in Q2 2020 after COVID, followed by a rebound to a 32% rebound in sheet consumption after a number of government stimulus measures and monetary policy. And in Q2 again this year, there was strong demand in peak season. So specifically, why has demand improved this year and last year? The main reason is a housing policy by the Russian government that was introduced in July last year, which was the state preferential mortgage program. So this was, there were a number of measures to help the housing market, but this was probably the most important, and it essentially fixed interest at 6.5%. For houses in Moscow and St. Petersburg, the houses were up to the value of $175,000. So usually first-time buyers. And this has basically meant that a lot of the household savings that were accumulated in COVID have been put into purchasing new houses. This was renewed in July of this year. So the effects are still ongoing, even if the demand is not as high as it was at the very beginning. And if you look on the far right-hand side, for September this year, if you look at bank escrow accounts, which show mortgage amounts, and also actually the September mortgage portfolio growth, both of them show quite strong growth. So we can see that coming through in bank figures as well. So what does it mean for sheet demand? Well, the top left chart shows the Russian construction index. The blue line is the published one, and the pink line is the prospect for change, which is published by the Russian Federal Statistics as well. The prospect for change looks a lot more realistic based on the figures that we see in steel. So if the bottom left, sheet metal consumption in the construction and secondary industry decreased in Q3, down by 11% year on year. In the engineering industry, there was a year-on-year growth, which we can see top right, but a slight slowdown from Q2. The engineering includes automobiles, and Russia has also suffered from a lack of semiconductor chips. and the pipe industry as well has actually gone down in Q3, demand from the pipe industry for sheet metal. I couldn't go through this presentation if I didn't mention the Russian changes in the tax policy, which have been in the news regularly this year because, as with many countries, there's been more government policies. So there have been 3 changes in the scrap tax. The export scrap tax, essentially increasing the amount each time, and the latest one was within the last week, where the export tax on scrap is either 5% or not less than 100 euros, and that will start from January. The other major tax that has been announced or in the news was from August to December, the export tax of 15%, which will end in December, and that will be replaced by taxes on the production of steel. And so there's the mineral extraction tax of 4.8% for iron ore, 1.5% for coking coal, and a 2.7% tax on liquid steel from the furnace. And finally, a tax on EAF steel as well. So Q4, what's the situation for flat products? I've specified flat products here actually. So we expect that hot rolled and plate demand will fall by 3% overall in 2021. And the reason is the displacement. Number one is displacement of demand due to high prices. Number two is a number of price sensitive projects have been delayed. So substitution here, it doesn't mean substitution from steel to wood. It means that customers will prioritize or they'll do different parts of the project that have cheaper steel grades, for example. And 3 is a slowdown in the engineering sector recovery. So machinery and automotive, again, we know about automotive and semiconductor shortages. And we can see on the right here, the light vehicle sales they've slowed down in the last few months, even with a small month-on-month increase in the last couple of months. But for 2022, consumption is expected to grow, and by 2.5%, and that's coming from continued residential demand, some restart of delayed projects that we've seen because of price this year, and I mean, in addition to that, there's it looks like GDP will be up because of the oil price in Russia this year, and the government has announced that it will spend $5.5 billion from its wealth fund in state investment, equally split between infrastructure and development strategy. So moving on to the global market, and as usual, most important in the global market is China. In China, so on the right-hand side here, I've got a chart showing Chinese steel output in the last several years. So in 2015, the Baosteel CEO predicted a 20% fall in Chinese output, and that was when the Chinese economy was doing badly. And his rationale was that every country has experienced a 20% fall, more or less, in output when the economy has been doing worse. But as we can see at the bottom, this happened for the USA, Japan, Europe in 2009 after the financial crash. And there were big contractions in 2020 as well, but China actually in both those years, production increased. So what's the situation with production now? It was interesting to hear Jim earlier talk about this, and his expectation that it would, with the new government policy, production would go down. I know that there's been skepticism about production actually falling in China since the war on pollution began in 2014. But it does seem like this time production really will decrease. And the reasons that I have given here are, first is the Chinese President Xi's determination to reduce emissions. And secondly and thirdly, the economic conditions are there for change. And there's some international pressure, even if China don't openly say that that is the case. And on consumption in China, the completions for this year, so the top right-hand chart shows annually the real estate square meter completions in real estate for China. And usually in the fourth quarter, this is quarterly data, usually in the fourth quarter, about 1 million square meters is added, which probably takes us to, which would, from here, about 1.49 up to October takes us to 2.5 million, which is slightly lower than last year, but broadly the same. So completions for the year are similar to last year, but the starts have slowed down significantly, and 7.7% fall year on year in January to October in starts, which is the purple line at the bottom, shows that things have been slowing down. But as Jim said as well, the fact that these completions will be the same year on year, that works with Jim's idea of, or expectation of, similar demand but slightly lower supply in China this year. But the important thing is really Q1 and Q2, in my opinion, and the reason for that is because of the upcoming situation with Evergrande. So why have we had a fall? It's because mainly because of the government's policy to crack down on over-leveraged property developers. And what's next? Well, the main deadlines for Evergrande payments are in March and April. And even though it's never entirely clear how much influence the Chinese government will have in this, these payments are in the billions rather than the millions that we've seen in the headlines in the last few months. So Q1, Q2 should be an important time for the Chinese real estate industry, particularly for understanding how much demand there will be next year and going forward, and whether this credit situation can be managed. And in terms of the export market, China's impact on it, well, commodity grade exports are falling from China, or have been falling. So in the right-hand chart, the blue bar shows the hot rolled coil exports, which have been coming down, whereas galvanized exports or coated exports have actually remained the same. And the left-hand table shows an EU investigation into steel wind towers that was launched in October 2020. I would expect that we see more of these kind of investigations as China tries to export high value added products over commodity grade. So in conclusion on China and the global market, the flooding of commodity steel into the global market from China is less of a concern, and this will continue to reduce. Who are the benefactors? Well, mostly Asian countries. So the company share price of Indian steelmakers increased after the Chinese export rebate was removed. But as was mentioned earlier, when China brings down production and demand, the absolute level of steel should come down. So there should be indirect benefits for large exporters, such as Russia, and protectionism shifting further down the value chain. And then finally, China should I expect China will manage the slowdown in production and demand, rather than, as the Baosteel CEO said, rather than a 20% fall in production year on year. So in moving on to ESG, ESG, mostly the policy for ESG, the pressure for ESG for companies to change is coming from top-down policy. So those are things like the emissions trading system for the EU, which will change into CBAM, and reporting standards. But there's also some consumer-driven demand, even if in steel, the consumer-driven demand is not so obvious, because steel's a kind of a mid-supply chain product. It's not a finished car. So here I've just shared some survey results that we did with our customers, and these, for me, these show that the companies are very aware of needing to reduce their CO2 footprint. The main takeaways here are, as written, 48% of our customers have at least Scope 1 plans. Many of them have Scope 1 and 2 plans for reducing the CO2 footprint, and 80% consider the footprint of their products important for their business currently and in future. And NLMK obviously is aware of these developments, and has announced several measures for more sustainable steel. So with a blast furnace, the first things that you need to do are focus on energy efficiency. So there are several energy efficiency measures that have been announced, and the real main announcement has been an HBI production facility at Stolensky, which will allow high value added ferrous units for steel production and reduce emissions significantly. And so, in summary, on green steel, the key points: there's a direct impact on EU costs for EU mills who don't change. So the CBAM will have a direct impact there, and if implemented well, then should also have an impact on anyone who wants to sell into the EU. NLMK's Strategy 2030 is not announced yet, but it has a portfolio of projects to reduce emissions over the next 10 years. And then one outlier, I mean, very important, but China's ETS system is still quite new. The EU ETS took a decade to become mature or start with the price actually moving. And while the China price is currently $6 to $8, if that increases in line with the EU price, then that changes the cost structure and likely the overall prices. And just finishing on prices in summary, the expectation, or at least my expectation, is that prices align in 2022. So as you can see from the graphs, there were these nice, easy alignments even last year, even 2020 period, and now these different geographical prices are all over the place. And part of the reason is freight rates, but also different dynamics whilst economies move back to normal from a strange COVID situation. Things like domestic stocks replenishing as well makes a difference. So on price, things aligning, but in terms of historical prices, which I know several other people have mentioned actually in the last day or two, there's not an expectation of returning back to the level we were at. And demand-wise, there should be some support from a rebound in automotive next year and semiconductors, and also some delayed demand this year will come back and support things too. Thank you very much. I think you may be on mute, Murat.
I am sorry. Thanks for reminding me. Thank you very much once again. I was so focused on your presentation, I forgot to unmute myself. Thank you. So yeah, really appreciated your presentation. We will move to the Q&A session. I hope you have a few more minutes. I have, let me see. No questions from the audience yet, but I have one question myself, if you don't mind. From what I have understood from the presentations I have heard during this couple of days, there is apparently, obviously taken into situation the efforts in reducing carbon emissions, the changing process of the steel industry. The scrap consumption is expected to increase, and that, if you like, translates into probably a new support level for scrap prices in the market. And then Chinese production is going down. Likewise, the efforts to reduce carbon emissions will have a negative impact on blast furnace-based steel production worldwide. So there is probably going to be a lower support level for iron ore prices. In your opinion, how is this going to have an impact? What kind of an impact are all of these going to have on Russian steel production, cost-wise, competitiveness-wise?
Good question. Competitiveness-wise, well, I suppose it depends. It depends on what time frame you're looking at, whether it's 10 years or 20 years or 30 years, because obviously Russian production is blast furnace based, and I think with all, but I mean it's also true that 90% of European flat steel production is blast furnace based. So a lot of producers need to think about these things, and the way that NLMK is approaching it, and similar to other companies, is because of the large capital costs. The processes come in 10-year cycles, which is why our strategy is Strategy 2030, and our first move or first decision is to have an HBI facility. That does give options later on about switching the type of steelmaking that you want to do, which I know that European producers also have these kind of plans. It goes from blast furnace efficiency to HBI, to HBI and EAF, to HBI, EAF and hydrogen, which is the holy grail of green steelmaking. And yeah, I think that's really the expectation over the next few years, that Russian steelmakers are very aware of it and are putting things in place to change. I don't know if I answered your question exactly.
Thank you very much. Let me ask another question from a different angle. You have also mentioned that the Russian authorities have increased the export tax on scrap, and obviously the scrap consumption in local steel industry, Russian steel industry, is going upwards. How would you look at, what's your outlook on the scrap exports from Russia?
Yeah, another good question. I think the scrap export, tax is quite a complicated issue, I mean, I haven't gone into the full analysis of it, but I remember in my previous job, I did read some analyses of it, which had, you know, like very different conclusions. At the moment, the scrap prices in Russia they've been going up domestically, kind of a relentless increase, and so it makes sense to have an export tax to keep things viable in terms of a cost. In terms of long-term expectation, I mean, it really depends where the prices go. I mean, the Turkish steel price currently, the scrap price being around $500 a ton, is so far above anything historically, and it's not easy to answer why that price is there itself. You know, is it, how much of it's freight, how much of it is a structural change? I'm not sure, but there should be I'm sure that there should be some kind of correction, but to what level it's difficult to say.
Thank you, George. We have got a couple of questions from the audience here. Let me read the first one from Murat Kula. Says, "Hi, George. Thank you for valuable sharing. Do you think China can really reduce production?" I'm asking this question with the perspective of China used to grow 6 to 7% for last years, and how they will compensate if they reduce the production in their economy. Do you think Russia will have extra measures for scrap or HRC export, as in terms of extra taxes, etc.?
Sure. Thanks for the question. So the first part here, can China really reduce production? Well, I mean, who knows? But I think that, but the idea that I wanted to get at in the presentation is that 50 to 60% of Chinese production Chinese demand has been real estate. So if China is to reduce production, unless they want to be importing steel, they need to reduce their real estate demand. And so that's why understanding what the future trend will be for real estate is so important, and we should be able to get a better idea of that next year in Q1, Q2. I mean, already previously China was expected to peak in 2021 for steel production. So the previous growth of 6 to 7% per year, I don't think that's expected. And if they want to reach their targets, then they can't do that. As mentioned in the earlier presentation, there are specific targets for the steel industry now. So I would expect that to change. Will Russia have extra measures for scrap or hot rolled coil exports as extra taxes? At the moment, I don't think so. I think the mineral extraction tax and the liquid steel tax, they've replaced the export tax that we had, and the export tax was really implemented because prices were so high, and Russian producers could get good, you know, they could easily sell on export. But that situation has changed definitely in the last quarter. So no, I personally wouldn't expect export taxes on hot rolled coil at the moment.
Thank you very much. One last question. This is from by Lemes Teixeira. How do you expect agreement on Section 232 between Europe and US to affect the steel pricing market?
Good question again. How do you expect? Well, I mean, the first obvious impact is that the EU can sell to the US, but because the quota is on a country basis, a country by country basis for European countries, not every country in Europe can sell to the US. So the two countries who have the largest quotas are Germany and the Netherlands. And well, I mean, previously, actually, I thought why is the Netherlands quota so large? Probably because a lot of people, a lot of shipments left the Netherlands ports, even if they didn't originate in the Netherlands countries. So it's kind of an open question: can you send to a port in the Netherlands and then ship to the US? As I understand it. But what's the impact on pricing for the Section 232 situation? Well, theoretically, it's that Europeans can sell at better margins to the US, so the supply-demand balance in Europe could be impacted. But there's also debate about how easy those sales are, how much demand there is in the US, even if the prices domestically are very high. So, yeah, beyond that, it's probably speculation. So, I mean, already it's a bit of speculation.
Thank you. A couple of more questions. Those are actually specifically on NLMK. First of all, Fujisawa-san sent in a question. How does NLMK respond to carbon neutrality? Do you plan to replace blast furnaces with EAFs? Any plan to utilize hydrogen?
Good question. Thanks, Mr. Fujisawa. Enjoyed your presentation. So I can answer in reverse. Definitely NLMK is exploring hydrogen. They recently, I had it in the slides, but they recently signed an agreement with a company whose name I struggle to pronounce, beginning with R, Rosa Goaritom, something along those lines, looking to work together on clean energy and potentially also purchasing nuclear energy off that company for Stolensky. So nuclear is one of the initial options, and hydrogen is hydrogen. Actually, NLMK signed. They have an agreement with Gazprom to look into hydrogen in future. So for sure, that's a consideration, and a plan to replace blast furnaces with EAFs. It'd be a big step, and it's not in the 2030 strategy. I don't know whether it will be beyond that, but it depends how quickly the industry moves and how viable all of these things are. But I would imagine that, again, it's certainly a consideration. Yeah, long term.
Okay, thank you. So let's have this one as the last question. This one is from Cemil Özer. What will be the capacity of HBI, and do you have intention to export HBI?
Capacity of HBI, I don't want to say the exact number because I don't want to get this wrong. I want to say something like 1 million tons. And do we have the intention to export? Initially, there may be some for export, but beyond that, but the plan really is to use the HBI internally.
It will be very precious then.
Very precious.
Okay. So that concludes the Q&A session. Thank you very much indeed, George. Really appreciated your time, your valuable information and presentation.
Thank you very much.
All the information you have shared with us. Please take good care of yourself. Stay healthy and safe. Hope to be able to see you in person very soon.
Thank you very much. And you, Murat. Thank you.
Thank you. Cheers.